Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for September the 8th, 2010. Now our first position is going to be in the New Zealand US dollar and the foreign exchange market. We can see here that we have a fresh crossover from Vantage Point on the triple EMA cross. What I want to do here is first identify our key levels of support: 71.35, 71.51, and 71.93 with a close of 71.90. Now with the the first trading day, a little volatile in there. We've got more problems with rumors, and I'll stress the word rumors, of banking concerns out of the Eurozone, again putting the pressure on the euro and some of the riskier currencies. But these commodity currencies are still holding up very well. Specifically, the CAD, the New Zealand, and the Aussie are all still holding up very well. So out of these three currencies, I like the opportunity on this one the best. We've got our key level at 71.35. That's a potential entry point for tomorrow, anywhere between 71.51 and 71.35. However, we are somewhat relying on the equity markets to remain firm. Now, with that said, let's go into our daily report from Vantage Point and see what we've actually got happening here. Now, looking at tomorrow, we can see our neural index has turned negative after several up days, so we can expect a pullback. And again, the pullback is very normal. So on this pullback, we're going to use that to enter into our long position. So 71.65 is the predicted low from Vantage Point for tomorrow. I suspect we may go a little bit lower than that, so I'm going to use the 71.35, anywhere between 71.65 and 71.35 to get in for that, to get into a buy position. And our stop should be down around, I would say, about 100 pips away, which is only 1 cent. About the 70.30, 70.25 area is where I would prefer to have the stops. Now that we've identified we've got the triple EMA cross, let's add a couple of more indicators in here. Let's add the predicted MACD, the predicted stochastic, and the predicted true strength indicator from Vantage Point, and see how this actually looks with these other multiple indicators applied to the same currency pair. We can see that our predicted MACD is supportive of our buy position. Our predicted stochastics is in somewhat overbought territory, and our predicted true strength indicator is still in somewhat negative territory and somewhat flat. But all in all, it's still supporting the buy position here. So let's take it one step further here now. Now what we're going to do is we're going to add a couple of more indicators. We're going to add our medium and long-term predicted differences to see if these are remaining above that zero line. Now again, very important to add multiple indicators. So we can see here that both the medium and long-term indicators are sitting at about positive 75. Again, that's all positive towards further upward pressure on this currency pair. So what we would like to see is we would like to see a push back towards the 73, 74 area after we get a slight corrective move lower. And again, we're going to use that to set our buy positions. So that's our first position for tomorrow. Now let's have a look at our second position. We're going to get a little riskier to begin the month of September. We're going to go into actually the S&P 500. Now, looking at the S&P 500, we can see that we also have a fresh cross from Vantage Point on the triple EMA cross. We've had three very powerful candlesticks that have come straight up off this 1050 area, and not surprisingly, we've got a long red bar candlestick that's come down here today, and essentially what I would consider to be a very minor retracement. Now, the extent of how much further it's going to retrace, well, if we were to use Fibonacci, which to be honest, I don't. If we're 1050 here, we go up to 11. Common sense tells me 50% retracement is going to be in the 1075 area. But again, that's for people using that stuff. I'm not using Fibonacci specifically myself. Not that there's anything wrong with it, it's fine, but I'm more interested in these crossovers. Now, this triple EMA cross has crossed over to the upside. It's very fresh, and it's sitting right around this 1080, 1090 area, right around just below the 1080 mark. This represents, in my opinion, a very good buying opportunity. We can see here that I've got support drawn down here, down at this just above the 1000 level, that we've got another good base of support sitting off 1030 between 1035 and 1040. We've moved up from there. We're now into a little minor retracement, but again, this is a bit of fundamentals that in my opinion have affected this. The talk of the Eurozone banking sector not reporting everything that they were supposed to report. You know what, guys? Rumors and market noise. It's going to affect the market for a couple of days, and then we're likely to move higher. Now again, that's based around the technicals and based around the correlation the S&P 500 has to some of the other markets, specifically the US dollar index. As the US dollar index goes down, the S&P 500 usually goes up. We still have that sell order coming through on the US dollar index. Nothing has changed there. So for tomorrow, again, we're looking to buy on a dip. We're not looking to sell into strength and get all caught up in this gossip and rumor and everything else. We want to stick with what we have. We have a buy signal here, a very strong one at that. So what we're going to do is we're going to go in now, have a look. We've identified, first I want to identify the key levels, 1077.30, 1079.20, and 1090.30 with a close of 1091. 1091.20 actually. So what I want to point out first of all is the market is closed above all of the three predicted moving averages from Vantage Point, even though we had this deep sell-off. That's a very positive sign for further upside pressure. So are we going to come back and test all the way down into the 1077 level? I don't think we are. So let's go in and have a look at the daily report, see if we can fine-tune this entry. We know we want to have our stops below that 1077 level. So now what we want to do is identify where do we want to get in on a buy. Well, we've got 1082.10 and 1099.40. So for tomorrow, we've got the neural indexes pointing down. That's good. We can use the move lower to get a better position on our longs. So 1082 is the area we're going to be watching. Our stops are going to be, we should definitely have our stops opened up here. I would prefer to have the stops around the 1072 level just to allow this trade to develop, because again, we're very early in the week and we are definitely going to see increased volatility. So with that increased volatility, we definitely have to cut back on our contract size a bit and give it room to allow this trade to develop. So again, I would be buying all the way down into the 1075, 1074 area. I would still be putting longs down into that area and then having stops below that. So we've done that. We've had a look at our major cross. We've identified we've got this triple EMA cross, the most powerful indicator in the Vantage Point arsenal. Now again, it is susceptible to fundamental noise. There's nothing we can do about that, but except wait it out. So what we're going to do here now is we're going to go back in. We're going to add the predicted MACD, the predicted stochastic, the predicted true strength indicator, and we're also going to put in our medium and long-term predicted differences, which serve as a purpose of both being an overbought signal and a way of determining the strength of the trend. So let's have a look and see what we've got here. We've got the predicted MACD, a very nice crossover there. Our predicted medium and long-term differences well above the zero line. Medium term somewhat overbought. No, not surprisingly, we're getting this pullback, but the long-term predicted difference from Vantage Point is nowhere near overbought. This suggests that we have plenty of room to the top side. Predicted stochastics, definitely in overbought territory. Predicted true strength indicator from Vantage Point has plenty of room to run here, and that's the main thing I want to point out. So with all of that said, all of our indicators suggest that we're going to get a pullback on the S&P 500 over the next 24 hours, and we want to use that to set our buy positions. So those are the market positions for September the 8th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.